All right, awesome. I'm able to allow guys to get in now. So it is July 1st. So, last week we talked about having a plan and basically trading, allowing you to have contingency plans. And that's a critical part of trading, is basically having your plan established. For every day before I trade, I have a ritual, I have a startup routine that I do, and that prepares me for that day's in trading. Our monthly plan is a plan to basically give us a baseline in trading. So you have a monthly plan, you'll have monthly and yearly goals, and you have daily goals. And one of the daily goals I have is to just make the right trade and be prepared and make the right trade. And I start off my morning with a affirmation, trader's affirmation, and this is part of my bigger plan. Trading is one part of life that that's something we do for occupation. But then overall, I have a list of things I'm going to do, when I wake up. So it starts with waking up every morning, being able to control your time and when you wake up, and then basically, your morning. How do you operate and control your morning? And so I'll go through my morning routine as part of my daily plan, which allows me to reach my daily, weekly, monthly, and yearly goals. And it all starts with the morning. And so, I have things that I do, and, going through my trader routine, I start here at the trader's affirmation. And from there, I have a startup routine, which, I've shared the checklist. And as a continuation, this Monday morning mindset call is part of the routine to start our week in trading. And so as a continuation of last week, I would like to continue on and go through the mindset training, because the mindset as a trader, to remind you that, trading is about 80% mental. When you're in a trade, out of trade, being able to be disciplined, being able to be patient, this is a critical part of trading. So we like to address it. So to get it started, we're going to go through a video, a part 2 of the kind of the monkey mind, the Zen, and start from there this morning. So let me turn it on and get that started.
Greetings, fellow traders. I'm Dr. Kenneth Reed, and welcome to Mastermind Pro. In part 1 of the Zen of Trading, we distinguished between two states of mind, monkey mind and Zen mind, or mindfulness. In part 2, we'll elaborate a bit more on that distinction and then explore how mindfulness can help solve or dissolve the most persistent trading problems. So let's get started.
You all come up here about the same problems. You spend about 50 weeks a year getting knots in your rope, and then you think 2 weeks up here, long time for you. None of you get it. The secret of life is...
No, what?
This.
Your finger?
One thing. Just one thing.
That's great, but what's the one thing?
That's what you've got to figure out.
You get the analogy here? Billy Crystal, monkey mind, literal thinking, knots in a rope, an endless stream of questions and problems that he can't solve for himself. Jack Palance, Zen mind, calm, centered, confident, no knots in the rope. Billy needs a different way of thinking, but what he needs can't be explained by Jack in words. It has to be experienced. That's why Zen masters only speak about Zen mind indirectly or in riddles. They don't answer monkey mind questions directly or literally, because those questions are just another expression of the problem. Answering directly wouldn't help move the questioner out of monkey mind. So Jack simply raises his finger, says 2 words, and points Billy in a new direction. That's the best he can do. But if we work with mindfulness directly, even for just 5 minutes, we can all experience a qualitatively different state of mind. It doesn't take any special skill. But after we've had a taste of mindfulness, the question becomes, how can we maintain a mindful state when we interact with the market? That's the most important question an aspiring trader can ask, and the most important challenge to recognize, accept, and work on. Because our interaction with the market almost instantly degrades mindfulness. That's why I refer to the market as the casino in the living room. The film 21 is the true story of a group of card counters from MIT who periodically traveled to Las Vegas and did very well for themselves at the blackjack tables. The hand-picked group was like the turtles. They were selected for self-control and presence of mind, along with an appetite for risk-taking. Well, with that rare combination of qualities, they were able to maintain the correct count despite being in an environment designed to distract them from that very task. However, 99% of aspiring traders are self-selected without any consideration of our qualifications for the job, apart from a keen interest. Consequently, for the rest of us, live markets are kryptonite for mindfulness. Inside the casino in our living room, we forget what we're supposed to be doing. We lose track of the count. Monkey mind takes over, and it's hard to break the spell. Like a bright, shiny object, price movement stimulates a very gratifying pursuit trance. And there's a dopamine drip in our brain from small gains that keeps us energized and motivated for hours at a time. Moreover, we are convinced that we're making progress, but it's usually an illusion. Why? Because when monkey mind is dominant, we're in our own exciting bubble. And like Neo in the Matrix, we don't realize we're in it. That's the problem. Objectively, to an outside observer, we might be inefficient, ineffective, risk-seeking, and possibly dangerous to our family's financial well-being. I've seen it all. But subjectively, inside the bubble, we feel hopeful, excited, willing to do whatever it takes because we believe we're on the verge of greatness. Although it's more likely we're on the verge of blowing up another account. But don't get bad. When it comes to money, we all fall into monkey mind. People are hardwired to do the wrong thing enough. Princeton professor Daniel Kahneman won a Nobel Prize in economics for proving it. And this is exactly why William Eckhart took the other side of the turtle bet. He thought that turtles would fail because good systems tend to violate normal human tendencies. And he was betting on human nature to win in the end. Like the MIT card counters, however, Wall Street trading floors make money almost every day because they operate like the house, according to mathematical models that give them a statistical edge over thousands of trades. And that's all that matters to them. But with respect to the casino on our trading screens, we are the customer, the mark, not the house. And we will struggle to maintain mental emotional stability because the scariest downside of monkey mind is this. When we're in it, we don't learn from our mistakes. And there's nothing more frustrating than making the same costly mistake over and over, right? Einstein put it this way. We can't solve problems with the same level of thinking that created them. I love that expression. That's why the most common trader problems repeat. If Einstein is correct, I'm sure he is, persistent trading problems can't be solved by doing more of what we're already doing. That is, by merely working harder. Instead, moving our trading forward requires a new level of thinking. But in order to sustain that new level, we need to deconstruct the environment that undermines it, the casino in the living room, and create in its place a pro-mindfulness trading environment. A pro-mindfulness environment most trader problems before they even start. That's how we lay the foundation for sustainable success. And that's what we will begin to explore in the next segment of this video, deconstructing the casino. I believe most aspiring traders feel overwhelmed most of the time, and that makes it easy to fall into monkey mind. But monkey mind is not the enemy. Monkey mind makes us active rather than passive and paralyzed, and often that's very useful. If monkey mind is useful at times, we shouldn't try to kill it or banish it. In fact, we never want to be angry with or reject a part of ourselves that causes other problems. Instead, the easiest approach is to adjust the factors in the trading environment that trigger monkey mind into action so that it naturally has less to do. And the most direct way to do that is simply to reduce overwhelm. Then, as we learn to manage things without resorting to monkey mind, it will naturally recede into the background. So what causes trader overwhelm? What causes monkey mind to get so activated? Well, let's start with the big picture, the meta cause, which I believe is data overload. What is data overload? It's too much input versus our capacity to filter, evaluate, and integrate it in real time. Why is it a meta problem now? Real-time market information used to be a well-kept secret, and expensive too, like a restaurant that ordinary people can never get a reservation for. But today, market data is like the cheap buffet at the casino, $8.95 except for Fish Fridays. It sounds attractive too, but most of it is irrelevant because it's usually not part of anyone's trading plan. Nevertheless, aspiring traders think that they need to pay attention to it so as not to miss something important. But lingering, unintegrated information clutters on my mind, slows down real-time decision-making, and increases uncertainty. And in an environment of inherent uncertainty, adding more is counterproductive. It leads to overwhelm, and that activates monkey mind. Monkey mind tries to solve the overload problem by juggling more balls and pedaling faster. But these tactics can backfire. The harder the monkey tries, the more it's likely to inadvertently create dozens of other trader issues, such as paralysis of analysis, fear of missing out, and impulsivity. Why is overwhelm so common? Because information is everywhere. The most common sources of data overload are the NBC, Bloomberg, social media, finance websites, paid chat rooms, email promotions, webinars, and scanners. There's also another more subtle factor that keeps some of us in monkey mind. For most traders, heightened information flow is somewhat addictive. Why? Because most traders have some adult ADHD symptoms. People with ADHD use baseline levels of dopamine, so they seek stimulation to raise it. Novelty is the ideal stimulus because it creates a continuous dopamine drip. Getting that data needle out of our arm means going into information withdrawal. Feed me, feed me. That can be uncomfortable for a while, but here's the good news. As we eliminate distractions and overwhelm and give ourselves time to select and integrate relevant information, all sorts of good things happen. When we filter out extraneous data, we get better at separating signals from noise. We recognize and react to actionable information faster and with better timing. We can remember and execute our method in real time and are less tempted to violate our rules. FOMO subsides and chasing becomes much less appealing. Increased self-awareness means we can recognize and correct our mistakes in real time before they get out of hand. We're less reckless. We don't make all or nothing bets. And we have the presence of mind to quit while we're ahead. We naturally think less and observe more, so we rarely experience the paralysis of overanalysis. And these are just a few of the potential benefits of reducing overwhelm by reducing data input. Now, if this topic is relevant for you, try this simple step-by-step exercise to make some lasting changes right now. Since I don't know you personally, I'm not going to make suggestions. Instead, I'm going to lead you through a process of self-discovery where you will ask and answer the questions yourself, okay? If this issue is relevant for you, you can do this exercise now, or pause the video and do it later. Here we go. Ask yourself if it would be helpful for you to make some changes regarding excess information flow, and then listen for an honest answer. Do that now. 2, ask yourself if excess information flow is contributing to feelings of overwhelm and overload. 3, ask yourself if reducing information flow and pursuing fewer things could possibly be helpful. Ask yourself if you're ready and willing to make a change in this particular area. 5, list the reasons you're both ready and willing to make this change. Pause the video here while you do that. 6, list the doubts you may have regarding making this change. Again, pause the video. 7, turn your palms face up, and in your left hand place all the doubts, and in your right hand place all the reasons to make the change. Close your eyes, and in your mind's eye, go back and forth between the two groups until something is resolved. Pause the video while you do that. If you've chosen to make a change, write down the specific changes you are willing to make now. Ten, the final step, do what you can do now and schedule the rest. Congratulations, you've just made an important step that will move you forward as a trader. We'll do some follow-up work on this in the next video. See you then.
All right, awesome guys. Let me come here and stop this share. So one of the things that you know, I actually get from that video, you know, I always talk about two things. You know, when it comes to, let me start the video so you guys can see me. When it comes to, you know, this video, I'm not sure if you guys want to post up what you got out of it, but you know, over trading and day trading is one of the things that I think, you know, traders get addicted to. And then secondly is you know, chat rooms, social media, and you know, basically the amount of information that you're getting in. You know, we start off with the mastermind plan. You know, I think this fits in perfectly. The mastermind plan is information, but it's information spread out. And then inside that, you know, mastermind plans, we pick, you know, normally it's never more than 20 coins, but normally it's 10. And even if you traded one of the coins every day, you know, you still wouldn't have overload of amount of options. You know, one thing that I try to avoid is basically following social media and reading too many articles, reading too many, you know, getting too many opinions, because at the end of the day, you know, we have a strategy, the foundation, you know, we have the alligator strategy for the trends. And then secondly, you know, tracking volume, and it can't be, you know, it can't be negotiated. Like, the volume is what it is. And so knowing that, that basically allows us to eliminate a lot of the FUD. So, you know, the volume, our strategy is the two critical pieces, and then the planning. You know, sometime when I'm up, you know, I don't have to trade. I can actually take a step back. I can actually walk away from the market. You know, and you have to ask yourself, you know, when you look at your trading journal, how many trades are you making every day? You know, if you're a swing trader, there's no reason why you should be trading every day. Now, if you're a day trader, it's like, how many trades are you going to do in a day? You know, you have guys that are, you know, the more you trade and the more you have, you know, a tendency to get into the monkey mind, because now you're trading, you know, some guys, they don't even realize they just traded 10 times in 1 hour, you know, and you're racking up fees. So, the day traders is really designed for experienced traders that have that control over their mind. And then day trading, you have to realize how much of that could you have planned. Now when it comes down to having a mastermind plan and having a plan, you're prepared to trade certain coins. And so it's important to stick to those coins that you've had notes on, that you've been prepared to day trade, that you've been prepared to swing trade. Because this way, that basically minimizes that tendency to trade coins that you're unfamiliar with. Sometimes there's coins throughout the entire month that'll run up, and if you weren't prepared to trade those, like for some Link, they weren't prepared to trade those, but Link we had looked at for like the last 2 or 3 months, and it was on the radar, and so for some it was already a long. Those that try to day trade it, when it's still running up, it was running into a period that was an observation period. So that's why I didn't send a call to day trade it, because it already made its move, and it touched 450 and now it's down to 350. It may go down to 3, but I mean it's still a good long-term trade. But you have to be prepared to trade certain coins, and a lot of times guys want to react to the market because they feel like that's the appropriate play for the day, and that's a day trade that you have to be prepared to go in and out of a trade faster. Day trades turns into long for some, and so you want to minimize that part, because like you said, traders, we have a tendency to have ADH, and want to be hyper vigilant, want to get more and more information. And so the roadmap, the plan is to basically be able to take notes and try to be a little bit more strategic with your trading. We have rules on Alligator. It's above the 7-day M&A. You can ride it, and you can sell it when it drops below it. And I think Mark, he's been putting some good information out, saying that the Alligator strategy, over a period of time, if you just follow the rules, would be super profitable. And it's been profitable for like the last 10 years. So I mean, Alligator strategy does work. Another thing is stop limits. If you are using stop limits, if you're using stop limits and you stop out at a certain number, for instance, you put a stop in at 11,000 and it drops under, you're stopped out. But you have to also use an set alert, so when it crosses back over 11,000, you're prepared to back in. If you just put a stop to stop out and you didn't have a plan to enter back in, then what was the stop really used for? It was to stop the loss, but it wasn't to help you maintain profitability, because you want to be able to re-enter back in that trade when it goes back over. That was the whole point of stopping. And then basically have a target of where you want to buy back in. So, on Bitcoin right now, I have 3 levels that's going to be talked about in the mastermind plan, which is 10,400, 10,000, and then 9,200. That's going to be the range down. And then, the range in crypto, Bitcoin for this month is 9,200 to 16,000. So that's a huge range. But on the way down, we have a plan. Now, if it goes down lower than 9,200, I'm prepared to hold. So you have to have a plan, and you don't want to react to all information. If you're getting new information, you have to be able to adjust. And if you weren't prepared to trade it, then sometimes it's better just not to have the trade at that moment. You're not going to miss out overall. Like it's a, you have a market that's nonstop. So you're never going to miss out on the trade, because there's always another trade. There's always another trade, and that is a part of the mindset. Now, if you're day trading, even as a day trader, you're not going to get every trade. But the trades that you do get, you can have a high success rate, because those are planned out, and you have a plan, and you have dates So pretty much everything is listed on our mastermind plan. It's been planned out and it has some type of date. Those are notes you want to take, and you want to have a default. A lot of times guys don't realize I've had new guys join the group in the last month, and some of them have just been buying Bitcoin up and down, one coin, just buying and selling, and that resistance. I think yesterday a couple of guys made a couple of $100 just by selling the Bitcoin volatility, from 30 to $80, and they did it 4 or 5 times yesterday, producing $200-300 just off of, the amount of volatility just in Bitcoin itself allows you to take $30 to $80 per trade, and you can do multiple trades a day, setting the buying and selling in between that volatility. So there's different strategies. For me, it's not over trading. And so sometimes that when there's something new that's happening, we'll start tracking the biome so we can have some history on the biome. And basically I let that be the guide, not the experts. And I let the alligator, be the guide when it drops below the 7-day M&A. And then as it touches the 20-day M&A, I'll buy back. And if it drops below that, then I'll get out and wait for 55. So those are, different levels that you can have rules, but you got to have a trading plan. So, going into this month, you want to track the things you buy. And if you can't track it, that means you're trading too much. A lot of guys are like, why don't you keep a trading pod? They bought it from their mobile phone. They weren't able to write it down because it wasn't a planned out and it was sporadic. Third is, they're in too many chat rooms, too many, following too many social media guys. You want to be able to take notes for your own plan. If someone has a alert, you want to be able to validate why it's being alerted. If you don't understand it, then, you want to minimize the monkey mind. Everyone has it. So the minimizing monkey mind is by basically having a plan and then having some rules and being able to stick to it. So hopefully that video was good and the kind of experts to it, but these are two of the main reasons that causes monkey mind: the over trading, the day trading, social media and chat rooms that are feeding you a ton of information that you don't have time to process. You don't have time to process that information, and so you don't have time to think of your support and resistance, draw your levels out. Something that you need to be able to do is draw the levels out on trades. And also being perfect. If you look at the average 7 days, you'll see lows and highs. If you're buying closer to the low, you'll have a few times to get out. All right. So if anyone has any questions on the mindset and the mental aspect, or shoot them out right now. If not, I'm gonna let you guys get back to your Monday morning and enjoy your trading day. Enjoy your start of a new month. And we have another meeting today at 2 o'clock to go over the mastermind. So go over our planning for July. And when you get that report, it's a baseline. So you want to be able to take notes, periods that you're going to be able to trade, periods that you're not going to be able to trade, and have a mini plan for the month, off the master plan. That's why I say master plan is basically give you a baseline to start a plan specific to some of the times you can trade in and out and some of the dates that you're looking at. So the information has been laid out a little bit easier. Like there's dates for Zcash, dates for OMG, dates for BOC integration testing, dates for KMD rebranding. We have a lot of information that are high level, give you some solid plays for the month. All right, cool. So thanks for everyone for joining, and have a great day. Talk to you guys later.